Hi, welcome everyone. Today is Tuesday, the 10th of February 2026, and you're on an open Q&A with Cass Smith and Mary Jane Liddycote from Freedom Financial Solutions. We have no set agenda. It's just whoever has a question to ask. You can put your hand up virtually, in person, or put your question in the chat and we can answer it that way. Sometimes we sort of start with a little bit of a chat while people warm up before they get their questions or before they feel brave enough to ask a question. So what I normally do is I say, Cass, what's happening in the world?
I don't even know where to begin. I've been actually resisting going on people's podcasts this week. Carl from Voice of Freedom wanted me on his podcast, but I'm like, I don't know what to say. What's going on in the world at the moment? It's incomprehensible what's happening. For those that have been watching the silver market, I'll just have a look what's happening again now. It's just hovering at the moment. But for those of us that are watching, a lot of people, probably 80%, 90% of society just don't even know what's going on. They don't even know anything's happening in the precious metals market. But for those of us that are watching, we know that there is a lot happening. And it's not, as I've tried to say over and over again, it's not about the money itself. It's not about how much money we're making out of gold and silver or how much we're losing. It's a matter of that the system is showing the signs and undeniable signs that the system is breaking. And there hasn't been this sort of volatility in a market ever. And it is all happening. I mean, I could go on about it for a long time, so I won't go into it. I'm sure it will come up as we proceed today. But it's all just the signs that the way I say it is we're at the beginning of the end. I have been predicting a financial crash for the last 3 or maybe it's 4 years now. And I believe we are now so close to that, it's not funny. Obviously, I thought it was going to be last week and I thought it was going to be the week before and I thought it was going to be the week before that. And now I think it's going to be this week or next week. It still could be 6 months away because they seem to keep manipulating. Every time we think it's about to crash, they just go and do something to manipulate it further. But we're at the end game. There's not much more they can do to manipulate the market, and then we will see, I believe, devastation across all financial markets. So we're here. It's a really exciting time to be alive.
And this leads into a really good question that someone's, Leanne has put in the chat, which is to do with investing your super money via an SMSF in gold and silver, precious metals. The question is, do you need to hold them for any period of time, or are you able to buy and sell as often as you like? And this leads into an article we put out in our newsletter just last night, because a lot of people have been worried. Like, some people have gained 60,000 in a day and lost 60,000 in a day. So it went zero-sum game, but that's how volatile it's been. So Cass, what's your point of view on that? I mean, I'm happy to answer, but people like to hear you.
Yeah, I do have a bit of background noise at the moment. I've got a plumber doing something, but that should be over in a minute. So a self-managed super fund technically is not meant to trade. They're not meant to buy, sell, buy, sell, buy, sell, buy, sell. So if you're going to do that, you're better off doing it in your own name. But there is no minimum period of time. Like if you bought some gold and decided to sell it a week later, there's no rule saying you can't. But in my opinion, in the gold and silver market, because of someone asking that question probably hasn't realised the spread. So what that is, and I can give you an example now, if you go and buy, let's just look at a silver coin with Ainsley. If you go and buy it now, $151 for a 1 ounce coin. And this is where the conversation gets really interesting. $150 for a 1 ounce coin, but the spot price of gold and silver is $115 an ounce. So people are saying, oh my God, we've lost so much money because the silver spot price is down to 115. But the price of the coin is still 150. So, and this is where we're...
All right. You just froze.
The actual... Okay. Okay now? If I keep it up, I'll go switch my Wi-Fi booster on. I don't like having it on all the time, but I can do it. Yeah, so the Ainsley is still selling the coin for $150, even though spot price is down at 115. But so the difficulty in trading is if you go and buy that 1 ounce coin for $151, I'll tell you how much you can sell it back to Ainsley for. So a 1 ounce of silver. So you buy it for $150, you can only sell it for $113. So you're automatically
13,
making
13, not 30.
13, yeah, 113. So you're buying it for 151, you're selling it for 113, you're automatically immediately making a $38 loss on that coin, and dividing that by the sell back price. So you're making a 33% loss the day you buy. So how are you going to trade? You know, gold and silver is not something you buy with the idea of selling again next week, because market would have to go up 50% for you even just to be making some money out of that trade. So gold and silver really is more of a long-term buy and hold strategy.
And as Ainsley often says in their presentations, the end goal is gold. You just hang on to that until you want to make a major purchase in something. A lot of people are parking it in gold to then, when the time's right, maybe sell it out and buy some property or something. But the one thing that people do look at is the gold-silver ratio. So late last year, the gold-silver ratio was almost up to 100, which means that for every 100 ounces of silver, you could buy 1 ounce of gold. It then dropped dramatically. Even a couple of weeks ago, it went down to 47, was as low as it went, which means you only needed 47 ounces of silver to buy 1 ounce of gold. So that's where people would be looking to swap out their silver for gold. And that's one area that you might be just keeping your little eye on it. But it's gone up again. It's gone up again. And that's got nothing to do with gold or silver going up and down. It's got to do with how they go up and down against each other. So, and look, it might sound a lot to get your head around at the beginning, but the more, you take a little step and start looking at it, the easier it becomes. Now, just want to drop back to, so JB, this is a good one. Kat, who would be the one analyst you would want to follow right now?
So I always defer back to Jim Rickards and Robert Kiyosaki as a close second. The only reason I put Robert close second to Jim is that Robert follows a lot of Jim's work. So Jim is the ultimate source. And then people like Robert and myself have been following Jim for a very, very long time. Jim Rickards. He was a financial advisor to the Pentagon, to the US government. So he's got some idea of what's going on. And he predicted, well, he didn't predict because he's made it very, very clear. We went to a seminar of his in Sydney back in August last year, and he said, don't quote me on it, so I'm not quoting him on it, I'm just telling you he said this, that he would predict gold to go to 100,000 an ounce US. And it's currently only, at the moment, US 5,000 an ounce. So,
and that's a really good point, because even like you look at the normal punters, analysts out there, and they all tend to agree it's definitely going to go to 10,000 an ounce. That's not even in dispute. 10,000 an ounce is kind of, and then you get those who really look at it like, Jim Rickards and so on, who get out there on and talk about, he said 200,000 in that thing we went to. And he said, but that's all based on if everything I say here happens, that's where it could go. He said, don't go away and tell everyone that. But he has been saying 100,000 for a while, hasn't he?
Yeah. And so I got into gold about 15 years ago based on Jim Rickards' work. And so, yeah, I follow him a lot. And if you go on YouTube and if you follow people like Jim and Robert Kiyosaki, then a few other commentators will start popping up that are quite credible as well.
There's a good guy I quite like, Dr. Kirk Elliott. He is an American, so a lot of the stuff he talks about is sort of, US centric, but he has been on the Maria Z show a couple of times. I didn't see him there. I saw him on an American podcast, and I really like every Monday he did a little session, and I found it really interesting. So I put those names in the chat here. So Leanne's saying, yes, that makes sense regarding the selling of the metals. You're thinking maybe after a year. And look, it's not about when, it's like a period of time. It's about if you're just sort of watching what's going on, and then you feel like you want to swap it out, then and it works for you. Like, you know, coulda, shoulda, woulda. We all coulda, shoulda, woulda swapped out some silver when it was at its all-time high 2 weeks ago. But, you know, we don't do that. And then now it's dropped down again. So the point is, especially if it's in your SMSF, you're thinking about retirement. So basically build up your wealth in that vehicle so that once you do hit 60 and meet the conditions of retirement, go into pension mode, then when you sell anything out off, it's capital gains tax free, which is fantastic. Eliza has said, is the time, oh, someone's got their hand up. Katie does, but I'll read Eliza's, then we'll go to Katie. Is the time to be taking metals into my own, oh, is it the time to be taking metals into my own possession? Currently, I've got it in pool allocated, which is unallocated, and I'm hoping to keep it that way for another 18 months, but we'll store the hard metal, physical metal in storage if I need to.
Yeah, that's a really good question. Like, I mean, all I can answer these questions with, I guess, is my own experiences, and I'm very torn about it because I would prefer to store the metals at home. I do prefer to have it in my possession. But having said that, you know, I don't want to be a target of a robbery. And if I'm out here talking about this all the time and telling everyone that, yeah, I've got all these metals, you know, I will end up being a target. So I have all of mine in a vault. You might not have that circumstance. If you feel okay, if you feel confident to store it at home with your security and you put it in a safe and you hide the safe, and I used to have like dummy safes where I'd have, you know, 4 or 5 safes spread around. If you feel confident with that, by all means, I would say store it at home. But if you are like me and a little bit security conscious and worried about that, then store it at the vaults. Then having said that, so I have got mine stored at vaults and a private vault so that if the world starts falling apart, I can actually go to that vault, get it all out. And I think at the end of the day, if the world was, if, you know, a nuclear bomb went off, if Trump announced World War III, if the financial system really crashes and the banks are closing and we're really heading into, you know, what I call the end game, I would most likely go and get it out of the vault and store it somewhere with some very big, strong boys protecting it. So, yeah, I can't really answer your question. It is really your circumstances and whether you feel confident storing it or not. Storing it with allocated and unallocated with Ainsley, I've also done that, and I also still have some in that. With the same philosophy that if, like, so Ainsley, I believe, I do trust them, when they say that they've got an allocated and an unallocated pool, they do have that. They have a section of their vault that's got it. So if you've got money in unallocated, it's sitting in a big pile of silver that your name is technically on it or on a percentage of it. So it's still physical. You still physically have the gold and silver. It's just with them. And then having said that, if the world really started falling apart quickly, I would go to Ainsley and say, okay, convert it to the physical stuff. Give it to me, my physical stuff, and I would take it away. Only because, yeah, people have been scared of gold and silver confiscation by the governments. I believe for that to happen, we really are at the end game. We're in Mad Max territory if the government are doing that. I don't believe it's going to happen, but if it does, they're not going to have the resources to come door knocking with a metal detector to go all over your property trying to find out where you've got your gold. They will go straight to the vaults. Not the private vaults, because they don't even know what's in a private vault. Could be drugs or something in a private vault, could be anything. But in the gold and in the Ainsley Bullion and all the other bullion dealers' vaults, you know, they know there's the gold and silver. So if ever we did get to that situation, yeah, I would prefer my metals not to be there.
All right, Katie, you've had your hand up, but you can unmute yourself if you're not muted and just ask your question.
Okay. Can you hear me?
Yes.
Okay. I have 3 questions, if that's okay.
Yep.
How much personal gold and silver can you sell without having to declare it?
So I think it's still the $5,000 limit. You can walk in there and with $5,000 and they will take that without putting it on the record.
Okay. The next one is with being over 60 in SMSF, if you want to go to pension mode, what percentage do you use and how do you determine how much gold or silver you need to sell? Is the value based at that date? And do you have to take the same amount each year?
Yeah, so that rate is set by the government each year. I'll just have a quick look. Pension minimum drawdown. So it's set at a certain percentage based on your age. So I'm just going to give you a little bit of an idea of what those minimums are. So just going to find it. Didn't go to the right spot. Here we go. So if you're under 65, that's just like it. Actually, I might just share my screen because anyone can have a look at this. It's very easy to find on the internet. Yeah, okay. So based on what age you are, there's the percentage. So 23 to 24 onwards, if you say under 65, you have to draw 4%. So every year, 4%. And then as you get older, those percentages go up. So the whole idea is that they're basically wanting you to draw out your super as time goes on. Then how do they measure that? It's based on your account balance. It was always your account balance at the beginning of the financial year. So that would be based on the value of the gold and silver at the financial year. If you're in an SMSF, your accountant will be giving you financial statements that have that balance. So, and your accountant, if you're with FFS, will also help you work out what 4% of that balance is. I have read something only yesterday that they're looking at some sort of average between the opening and closing balances for the year, but I don't know if that's correct yet. Then when it comes to how you're going to work out gold and silver, that's a good question because, you know, if you've got to withdraw, say, 4%, let's just say randomly that comes to $24,000. Yeah, there probably won't be a bar of gold or a bar of silver that is exactly $24,000. So you're probably going to have to sell $25,000, $26,000 worth or whatever it is to put into the bank account to then draw your minimum. So let me know if that doesn't answer all your questions.
Yeah, no, that's fine. And the last one, when somebody dies with metals in their super fund, do the people that you've said are going to get them, can they just sell them or do they have to pass, or do you have to pass the metals on to whoever that you've decided to inherit them?
Yeah, either which way. So in a super fund, they will need to be paid their death benefit, however much is left to them. That they could get the super fund to sell the metals and then pay them in cash, or they could say to the super fund, I'm happy to take my benefit by way of just distribution of the metals.
Right. I have seen a guy online saying that if you want to do that without the tax that's associated with passing it on at death, you have to liquidate your holding and then buy it back under a certain term. Does that apply to gold and silver?
I've not heard anything about that.
Okay.
As far as I know, there is no way, unfortunately, to avoid the tax to beneficiaries in the super fund.
Okay. No worries. Thank you for that.
I'll just cover off a quick thank you. I'll just cover off a quick question. Rebecca has asked, are we going to be talking about self-managed super fund structure with other assets other than gold and silver, in addition to the structure and costs? Something about the market, I'm not sure what that means, but we're not doing a detailed presentation here on all of those things, but if you want to, I've put my email address in the chat. If you want to email me, I can send you information about all of that. Setting up a self-managed super fund, that's pretty much when we do those presentations. It's a 40-minute presentation with 20 minutes of questions. So in the email I send you, there will be a video of one of Cass's presentations about that. So you can sort of start there and email me with any questions. But in terms of assets other than gold and silver, that does lead on to the next question from Marta. Can we buy a property or land through a self-managed super fund overseas? And Cass, before you jump in, I did have someone ask me about that the other day and I checked it with our accounting team. It was to do with property in Bali. And property in Bali, you don't get the title of the property, you get a leasehold arrangement. So basically, the advice in this situation was, you know, it can be tricky because you're not getting a title, and normally the auditors want to see a title to a property. But do you have any other comments about buying SMSF property overseas?
Yeah, you can. In my experience, I've had clients do that, no problem. You will, you know, the leases, say, for example, Bali is a 20-year lease, or that they are absolutely fine because they're fully legal. That's the only way to buy property in Bali. So that's fine. You might have a little bit extra cost because all of the documentation you will need transcribed into English for the auditor. But other than that, it is okay to do.
Yeah, it's always good to check with the accountant before doing it, which is what this client did. Now, so that was Marta. Now, Jane Royer, you did have your hand up before Marta. Do you mind if we just go to Marta first, because she might have a carry on from that question? So Marta, you ask the question and then we'll go to Jane.
Yes, if I buy a property overseas with a part of my superannuation, like currently I have in metals, and let's say I sell half of metals and I buy a property overseas, all the costs involved can be taken from superannuation?
Yes, correct.
And what happened when the age patient come, like I'm 55 now, like at 60 or 65 or 67, what's happened with that property? Can I transfer in a private trust or?
Yes, you can if you want to. I don't know why you would want to, though, because an SMSF is a very good place to keep it with all the tax benefits. But if you decide to transfer it out of the SMSF, yes, you can do that.
That means I can keep it for as long as I live in SMSF?
Sorry, you broke up a little bit. Can you just repeat that?
I can leave that property or land as long as I live through SMSF trust?
Yes, you can leave it in the SMSF forever. You can't ever live in the property, though.
And for example, if I use all the money from my SMSF for a land or a property, what happened when you know how you mentioned before, after 6 you are able to start taking a percentage from your superannuation. If you have a property, that means you don't have any money in your SMSF. What happened with that? No one forced you to sell that or something like that, isn't it?
No, you would have two choices in that regard. You would either have to have some spare cash flow in the SMSF. Like hopefully that property would be rented or something, so bringing in some income, so there is some cash flow. If there is no cash whatsoever, if all of your super is in the property, you won't be able to set up the pension, which is fine. You don't have to set up the pension.
Okay, thank you very much.
Okay, now Jane, you've been very patient. Over to you.
Right. Thanks. So I'll just put my hand down. Yeah, so I had 3 questions. The first one is, with buying crypto, do you know if Macquarie is still not allowing crypto purchases? And are you aware of anyone that's found a workaround for buying crypto through their SMFS?
Yep. So Macquarie still does not allow SMSFs to pay for crypto purchases on crypto trading platforms. There's a very straightforward workaround. It's actually just a solution that a lot of our clients take advantage of. When they set up, we set up the Macquarie bank account in the name of the SMSF as normal, because that enables much less work for the client, and all the money goes into that one bank account, which is connected to the accounting feed, so that when you get access to the app, which you can log into and see your super, what it's doing, everything's sort of up to date, and you don't need to send in statements every year and so on. So it's easier for you. What the client who wants to invest in crypto then does is, about halfway through or towards the end of the setup process, they'll find themselves a crypto-friendly bank that they prefer. We can't recommend one, and also it changes all the time. You know, they do it this week and they don't do it next week. So they'll find themselves a crypto-friendly bank and then just transfer that amount of money that they want to invest in crypto in one big lump sum. Let's example, $10,000 into that second SMSF bank account. So they have two SMSF bank accounts. They transfer a big lump sum for their crypto purchase into that SMSF bank account and pay, that's crypto friendly, and then pay for the crypto from there. And what that means is that the crypto investment amount is sort of, it turns up in that feed that's on the app. And you don't have to be sending in bank statements and so on. So you, in effect, have two SMSF bank accounts, but you're able to have two SMSF bank accounts. The main one where your employer contributions are going into, fees are being taken out of, all of that is still with Macquarie. So it's always up to date and much less work for the client.
Okay, great. Thanks. And my next question was, what about if you wanted to buy stocks/shares with your SMSF? Are you able to set up a account with like a platform such as Stake and just do like under your super fund's name and just do trading?
Exactly. Just like you would set up an account with Ainsley Bullion to buy bullion or crypto. You contact the platform, whoever it is, and explain you need to set up an account in the name of your SMSF. They will say, okay, we need this paperwork and this paperwork. You send it in and you set it up that way.
Okay.
And then just make sure the payments to that platform always come out of the SMSF bank account.
Okay, no worries. And my last question was, have you heard anything about people? I know that Ainsley's recommended for metals, and I've used them, but I was doing a comparison of their spread with Perth Mint, and they actually have a much higher spread than Perth Mint. Admittedly, Perth Mint's all out of silver now, but have you heard any reports about Perth Mint? I was sort of trying to do my homework online, and it seems to be a mixed bag. But I was just wondering if you have any clients who are using them or who buy metals through more than one dealer.
I actually heard, Cass, sorry, just to jump in. I heard someone complaining about ABC bullion spread the other day, saying that ABC was really bad. I think it's potentially. I think it. The issue is at the moment the market's just all over the shop, so it's been sorry.
Yeah, that's what I would say as well. That
Just going to mute you. Sorry, Cass. I muted you because I thought that was your plumber noise, and you were going to. It was. Sorry. Just unmute yourself again. Sorry. I didn't realise you were going to actually say something. So I've heard that the merchants have been actually complaining about how to manage it. It's just been nuts. You can unmute yourself, Cass, if you want to. The Perth Mint, clients in Western Australia usually often buy from the Perth Mint just because it's more convenient. But on the East Coast, Ainsley is the Perth Mint representative. So, Lauren purchased from the Perth on the 5th of January and still hasn't got the metals.
Yeah, and that's happening across the board, across every dealer. Ainsley now have a 6-week delivery on quite a lot of products. But I went there yesterday and there was some available, just different quantities and different amounts. But yeah, their spread is not good, and I can't explain it other than, like, if you can imagine from their perspective, you know, only 2 weeks ago the market was at, you know, the spot price was at 160. They were buying at that price because they had such an overwhelming demand. So they're buying at that price. Then the market drops. It's like, well, what are they going to do? Are they going to drop the price and sell it at a huge loss? No, they're not.
Actually, that's a very good point, Cass. What we often forget, including myself, is that the bullion merchants don't just magically appear gold and silver. They're actually buying it from somewhere. So the costs are all sort of knock on. I mean, it's not an excuse. Thanks for raising that. I hadn't thought of it.
Yeah, and so by all means, like, we support Ainsley. Obviously, we recommend them, but by all means, shop around with the spread because it just does change just depending on what dealer's got what stock and things like that. So shop around on the spread, and also, you know, at times like these, I prefer to go with stock that's available or that's going to be available very, very soon. So you might go to Perth Mint and get a cheaper price than Ainsley, but they might. I've heard now delivery on some stock is going to be June. Like, I wouldn't like doing that because I wouldn't feel comfortable thinking I'm still going to get it in June. You know, the world could be anywhere in June. So sometimes it's about maybe paying a little bit extra, but being able to get it a lot quicker.
And Lauren said that she bought from Ainsley on Monday last week and everything was good. I bought from Ainsley last week, actually. I could pick up some of it and some of it has not been delivered, and that was actually from the Perth Mint. Perth are probably not selling due to their deals with Ainsley and Co. That's interesting. Don't know. Now, I just want to go back to a question which JB's asked. So in relation to when you said devastation across all markets, are you saying gold will crash too with everything else? And if so, are you expecting it will rise high after the crash?
Yeah, that's a really good question. So what I've said about when I started talking about gold and silver like 3 or 4 years ago, I've been reflecting upon this lately. I don't even know why. It was almost like an intuition. I was just, as a financial planner for 30 years or 20 years, I think it was, and then as a property advisor and real estate agent, I was always recommending property, build a big property portfolio. Yeah, maybe have some shares as diversification. But then all of a sudden in 2021 and then even more so in 2022, I got out of the property market entirely and I just kept going. It was like a mantra in my head, gold, silver, gold, silver, gold, silver, gold, silver. And that's what I started telling everybody else. And, you know, thank God I did, because everyone's made 100%, well, those that got in back then have made 100% gain, up to 200% when the market was up. But what I was saying at the time was not about making a 200% gain. It was about putting it in an asset class that was going to be safer than the other asset classes. And I never said it would be 100% safe. What I said was, when this financial crash, I believe if we're heading towards total devastation, which Jim Rickards and Robert Kiyosaki will say the same thing, that we're going to have the biggest financial crash in human history. And the biggest one in human history was back in the 1930s, and it was 80%. So if they're saying a crash bigger than that, like, that's huge. So when the whole financial system crashes, the share market potentially crashes to 80%. The banks close because they're insolvent. Perhaps your bank accounts are frozen. You don't have access to cash anymore. Property, I believe, will absolutely drop, because if people don't have money, then they're not going to be buying properties. People aren't going to be able to afford to pay their mortgages, their rates, their land taxes. They'll be selling properties. If too many people are selling, property market drops. Will gold and silver drop? Potentially. But it may drop at a lower amount. It may drop 10 to 20% as opposed to the share market at 80%. So for me, it wasn't about making these huge gains. It was being in an asset class that firstly is physical. You can hold it in your hand. It's not a number on a screen that can just be wiped out at the push of a button. It's holding it in your hand, and an asset class that historically drops by the least in financial crises. If anything, the evidence is on the fact that in a financial crisis, gold and silver skyrocket. Which is what we have seen. At one stage when silver market was up a few weeks ago, we were now at a 220% gain. That has never been seen in an asset class before over such a short period of time. And that's showing where we're heading in terms of the financial crash. What I do believe, what I think will happen, and this is completely my personal opinion, I could be completely delusional, but I believe we're going through a period of suppression, because the governments, those powers that be, are trying their best to suppress the price of gold and silver, but they're losing control. I believe they will lose control of that very, very soon. And there's a whole lot of facts behind this. The fact that the COMEX vault is empty, and there's a whole lot of short sales out there that all of a sudden they say that there's 1 ounce of silver for every 4 contracts on the 1 ounce of silver. So there's 4 people out there expecting to get that 1 ounce, but there's only 1 ounce. And when all of that, and when I'm saying 4 ounces, I'm talking 4 trillion ounces that they think, but there's only 1 trillion left. When all of this gets exposed, the system's going to crack. And I believe at that stage, gold and silver will go to the moon. And that's also what Jim Rickards and Robert Kiyosaki say, that, you know, we will be in for a 300, 400, 500% rise, 1,000% rise. Obviously, I can't promise it, but it's certainly what I believe and what I just feel intuitively is coming down the line.
Marta and Michelle have asked sort of related questions. Marta says, if you purchase land or house, are you able to pay in gold and silver from your SMSF? If so, do you have to pay a capital gain on that trade, or is it considered a trade? And the next question, which is very much related, is, Cass, please run through the process to transfer your bullion into your own name once you reach preservation. Oh, sorry, it's not actually. I think I must have been reading the same one twice. So let's just deal with Marta's question. And this is related to a question that people do ask us. If I swap out from silver to take advantage of the gold-silver ratio to gold, is there a capital gains event if it's in my SMSF? The answer is, if you're not in pension mode, yes, there will be. It will be considered a sell down, and whatever the 15% generally, if you've held it for more than 12 months, there'll be a tax on that. Once you're in pension mode, then no capital gains. So the similar would be applicable. So if you're going to buy a land or a house, and I'm not sure how many real estate agents would welcome you walking in there with bars of gold, but maybe there are. Even if you did it, then the auditors, the accountants, would expect the paperwork documented. So what was the value of that gold at that point, calculating what the price is on that and what the tax might be, and then the purchase. So it's all got to be documented. Have you ever had anyone buying any property in gold and silver, Cass?
Myself. But yeah, you're very, very, very unlikely to find a seller that is willing to take physical gold and silver. I mean, in the future, potentially, yes. But it's unlikely that a seller in these days would take the gold and silver at settlement. So what I had to do was just get it cashed in at Ainsley Bullion. Then they transferred the money to the seller's lawyer's trust account, and then it went to settlement. So the same thing would happen in the SMSF. You'd cash it in and then pay for the property.
I actually paid a tradie thinking I was doing him a good one in some gold, and he went straight down to the bullion merchant in the Gold Coast and cashed it out. And anyway, and then 2 years later, when he finally finished the work that he was doing, he said, "Oh, but gold's gone up, so you need to pay me more." And I went, "Mate, I gave you the gold then because I knew it was going to go up, but you didn't hang on to it. Oh, sorry." Oh, poor fella. So now, Cass, can you run through the process to transfer bullion into your own name once you reach preservation age, i.e. when you close your SMSF and you're not going into pension mode?
Can you run it into your own name?
So I think what your plan is, which sort of from a tax point of view doesn't necessarily make sense, is you think, I'm going to turn 60 there and don't have a job, therefore I'm allowed to take it all out of the SMSF and put it in my own name. Why wouldn't you want to do that, Cass?
Yeah, exactly. So a lot of people think turn 60, close down the super fund. Why? Because it's all tax-free in the super fund. Why would you want to take the metal out of the super fund, put it in your own name, and then pay tax on all your gains from now on in? So you would leave the gold and silver in your SMSF until you absolutely need it. So then, okay, if you do need it, if you've got a mortgage to pay off or something and you do want to get this gold and silver out, it's just a matter of everything at an SMSF has to be done at market value. So you'd work with your accountant to say, okay, what's the market value today? All right, I will take the gold and silver. That's the market value. That's what the accountant will record, because accountants can do these wonderful things called journal entries, where we just like journal it out. And so therefore you're taking the gold and silver out physically. The SMSF journals it that it's been paid to you. That's the end of it. It's a really simple process.
So Michelle's concern is because it's not safe in the SMSF system. But I think, Cass, your point of view on that is you can still keep it in the super system, protected by all the laws and the paperwork. But if you're holding the physical metal yourself in a hole in the ground somewhere in the property, you can have the best of both worlds. And this is certainly not advice.
Yeah.
What we've seen some people be aware of. It's protected and you get the tax advantages, but the physical stuff, when the zombies come, if you're holding it yourself and you feel safe to do so, you've got the best of both worlds. So hopefully that's answered that question.
Yeah, exactly. I mean, when you say it's safe, why is it not safe in the SMSF? But if you take it out and bury it in the same place in the backyard, all of a sudden it's safer because it's not in the SMSF. That doesn't make sense. If it's buried in the backyard or in a vault, it's safe wherever it is. Yes, the government know about it, but we don't want to go down that rabbit hole. But if they came looking for it, it's the same outcome. It's hidden. You don't know where it is. You've forgotten.
So, Anne, you've just jumped in. So we did answer this question earlier, but I'll give a little synopsis. You've asked, do you recommend taking all the gold and silver out of the SMSF and storing it yourself? Currently, you've got it in unallocated storage with Ainsley. What we do is we upload this video onto our YouTube either this afternoon or by tomorrow morning at least, and you can enjoy watching that section of it in detail. But the short answer to that, Cass, is it depends on your risk tolerance. Some people like Cass and myself, because we're so public about talking about gold and silver, we don't hold anything personally ourselves. That's simply the risk tolerance we have. So, and because silver, I don't know if you know how much silver is, it can be really heavy and bulky, and I'm in Canberra and there's nowhere I can get it here. I still have some in unallocated with Ainsley. Maybe I will then think, okay, I'll get a private vault and transfer it across. So that question, do you have a shorter answer to that we didn't cover before, Cass?
No, I covered it all before. Yeah.
We sort of talked about that before, Anne. So it depends on your situation is the answer. Lauren, Ed Dowd last week predicted a 40 to 50% market crash coming likely this year.
Yeah, it's absolutely. I believe it's coming this year with what we're seeing about the gold and silver market. If the history of the crashes is that there's always what we call a leading indicator. There's something that happens that goes, yeah, okay, something's not right here. And the previous one with the GFC was the people were following it at the time, called the subprime mortgage market, where basically America lent way too much money. They were lending 110% against properties to people who had no jobs, called them jingle loans. No income, no job, no assets, and they'd still get a loan to buy 110% of a property. That was unrealistic. The whole market crashed. But that was a leading indicator when those banks, the subprime banks that were carrying those mortgages, started getting into trouble. That was a leading indicator. In this way that we're going now, silver and what's happening in the silver market is the leading indicator. And as I mentioned earlier, it just hasn't happened in history before that an asset class has done 220% in a short amount of time. It's just not possible, historically not possible. And it is basically leading the way into this crash.
And now I just put down in there notes, The Big Short's a great movie, shows how the subprime crash happened. Really interesting. So Michelle said, yep, she's not safe in the system and she's happy to pay tax. I've never heard anyone say that ever, but anyway, you can pay my tax if you like. Rebecca's saying, can we ask the difference between an SMSF corporate trustee and an individual trustee? Very short, briefly, yes. In a corporate trustee, we set up a company of which the members are directors. You can have a sole director and a sole member. If you have two people, you can have an individual trustee structure. In our frequently asked questions, and I will put a link to that here, there is a lot more detailed explanation about the differences. We recommend corporate trustees, greater protection on you as an individual, more flexibility over time. The costs work out the same, more or less. It might actually end up costing you more in the long run if you have an individual trustee. The link is there. If you just go down there, click on the frequently asked questions, and there'll be a bit more of an explanation. And in fact, just on the asset protection stuff that Cass is doing at the moment, we've had some people asking about, can I have a personal trustee for a family wealth protection trust that we set up? In my mind, it doesn't kind of make sense. You're setting up a family wealth protection trust to protect you as an individual. If you have yourself as an individual trustee, immediately you're not protected. So why would you do that? It sort of doesn't make sense. SMSF is different to the Family Wealth Protection Trust structure, but nevertheless, it does afford you greater protection. Now, Leanne, what is the process of claiming back your setup fees from the SMSF? Do you need to have written minutes to document it? If you want to write written minutes to document it, you are most welcome to do that. I don't believe most people do, and we've never had a question from the auditors about it. Essentially, what happens is at the beginning of the setup process, we do ask for an $880 deposit paid up front. That is to show us that you actually are going to go ahead and do it. We have in the past 4 or 5 years ago did it with no deposit, and we are immediately out of pocket because we have to set up the asset company trustee, and that's bang, $650 gone. And there were some people who, lack of goodwill, just didn't go ahead, and we were out of pocket. So $880 deposit up front. As soon as your money rolls into your SMSF bank account, all you need to do is direct deposit, repay yourself from the SMSF bank account to your personal bank account, that $880. That appears in the bank feed. The auditors have never questioned it. And then you just pay us the remainder of the invoice. So that $880 comes off the full fee. So JB has said, hubby lost a job suddenly a couple of weeks ago, forced into pension mode for living costs. First question, are there any income generating assets worth considering at this time? 2, how would you manage a drawdown if you need to sell metal to live on? Would you try to only sell when the price is up? If you take out 12 months worth of expenses, how comfortable would you be to hold that much cash in the bank? These are very detailed, specific questions about your circumstances. Cass might have some broad comments to make, but we would recommend having that conversation with your own accountant, because we don't know all of your circumstances and what you have available or not available.
Yeah, I can just basically comment that no, there's no income generating assets that I consider as safe. So therefore, yes, you just need to sell down a certain amount of metal each month or each quarter to have some cash in the bank to pay the pension. And I would only do maybe a quarter at a time. I wouldn't do 12 months, because then you'd end up with a huge amount in the bank account, which obviously some of us, including myself, don't necessarily believe banks are going to be safe when this crash comes. So you just draw down, just sell three months worth of pension payments and have that in the bank.
Yeah, and then related to that, Lauren's asking, last week she was told, and when people say I was told, I'm personally always curious, where did you hear that information or who told you? Because it's helpful to us. So you were told.
Facebook.
Oh, gosh.
Facebook.
Okay. Cash held in, sometimes it's Mr. Chat as well. Someone was telling a client I had the other day a lot of things, and I said, Mr. Chat does not know or tell you the truth about gold and silver in an SMSF, so please don't believe what Mr. Chat tells you. Last week, Lauren was told cash held in the SMSF, cash management account, would be the first account to be targeted in a bank bail-in. Have we heard anything about this?
No, I haven't heard anything about that. Look, I wouldn't say that that's correct. Because I can't see that they would just target one particular.
Oh, have you got it for me?
Type of account. Mary Jane might mute that.
That's a lot, isn't it? Or is that before?
No, that's what she recommended.
That much?
No, I put water in.
Sorry, whoever's talking, we can hear you. I'm just trying to find you. Sorry, I've got.
Mute everyone.
Okay. Yep. Sorry.
Yeah.
Phil.
Sorry. Yeah. And I wouldn't think they're going to target a particular bank. Or a particular type of bank account. I think when the bail-in happens, it will just happen across the board. I mean, I could be wrong.
Anne, I'm sorry, I did see your hand up quite a while ago. Apologise. Over to you, and then on to Jane Royer again.
Hi, can you hear me?
Yep.
Yeah, look, sorry. Unfortunately, I missed the first 10 minutes of this Q&A session, so I don't know what was said about your thoughts about the outlook about gold and silver. But I was just wondering about that and about the ratio and what percentage of gold to silver you would be recommending at the moment in our SMSF.
I can answer that if set my plumbers in the background, but hopefully that's not too distracting. Obviously, we can't advise. I'm not a financial planner anymore. I I ditched my license so that I can actually tell my truth. I can actually give my opinion. As a financial planner, I was not allowed to give my opinion. I had to give the opinion of my licensee, which would have been no gold and silver because we don't make commissions on it. So now that I'm not a financial planner, I can say my truth. So there is no fixed ratio. I used to recommend 70% gold, 30% silver. That's just my personal, what I do. Then when there was such a big difference between the gold and silver ratio, I started saying 50-50, 50% gold, 50% silver. Now that the ratio is sort of changing again, I'm probably still 50-50, but ratio I'm just looking at is now at 61 gold to silver. I personally, when the gold to silver ratio gets around the 30, so that is silver's gone up quite a lot in contrast to what gold has gone up. When it's around 30, I would probably myself do some conversion of silver back to gold. And this is a common strategy of accumulating silver whilst it was in a very low phase for a very long time. And silver has done this historically quite a few times in the past, where it stays low for quite a long time in terms of the gold to silver ratio. And then it does a massive skyrocket to catch up. And that's what we're in at the moment. And then the strategy is, cash out of gold and silver, cash out of silver, go back to gold. So I can't answer you, but I would probably be doing it around the 30 gold to silver ratio mark.
Yeah, okay, thank you.
And just as a second opinion, just because I can't think too much, if I ever buy anything, which I can't anymore because I've got nothing left, but 50-50, I just buy 50-50 just because I can't figure it out. It's like I'll just buy 50-50.
Yeah, thanks.
Did you have another question, or shall we go to Jane?
No, that was it really. Thank you.
No worries, Anne. Jane, over to you.
Thanks. So I had two questions. First was, if you're still in the accumulation phase, do you pay the 15% tax on gains on gold and silver, regardless of whether it's just gains as in a change of spot price from when you bought it to the time the tax comes around? Would you still be paying 15% on gold and silver in that scenario? Or say if you saw that the peak was coming in silver and you cashed out some of that, and so you had income from that, regardless of either of those scenarios, would you still be paying 15% tax on any gains, or is gold and silver?
It's a little bit different because it's treated as a capital gain, not an income. So therefore, at the capital gains, it's a complicated calculation, but the end result is it's about 10% tax.
Okay, for selling or for spot
price?
When
you sell, as long as you've held it more than 12 months, it's about a 10% tax. So if you think about the gain, it's not on the whole lot, it's just on the gain. So you think about the sell price versus your cost price, and there'll be a 10% tax on the gain. So it's still a very low tax in terms of, I always encourage people to wait till 60 if you can. But obviously if you can't, no problem. It's 10% tax is pretty low when we talk about Australian tax rates.
And just to clarify, if the market moves up and you haven't sold it, that's not taxed. That's just a market valuation change.
Oh, okay. Yeah, that was the pointy bit that I was trying to understand, because I thought that somehow at tax time they were going to look at the spot price compared to when you bought it, and then you'll get taxed on that, but you don't. No. Okay, that's good.
You only get taxed when you sell.
Okay. Great.
So that was, just an interesting point for those that don't understand this. This is the big hoo-ha that was carrying on about the government was trying to tax unrealised gains. That's exactly what they were trying to tax, the gains before you sell. That got canned. They tried for 3 years, got canned. I don't think they're going to try that nonsense again because it's just ridiculous. You can't tax a gain that somebody has not yet made.
Okay. Excellent. Thanks for that. And sorry, the other question that I had was, and actually that might have put the kibosh on this, but how much buying and selling would count as a trade? Like, say if you saw that silver was skyrocketing unreasonably and you wanted to sort of get out, And
yeah, look, it's there's no one fixed test. The tax office apply to this like more of a common sense. If they look at your behaviour over time, and if you are, buying and selling, you've got 50 buy and sells in the space of a few months, you're obviously trading.
okay,
If you've just bought and then you sell because the price has gone up, that's not trading.
okay,
Yeah.
worries. Great,
Right,
thank you.
well, we've got 2 minutes left.
Mhm.
The last two questions is, Cass, any thoughts on platinum? And Cass, is your thumb improving?
My hand, no, unfortunately, because I keep working and I keep using my right hand and the mouse and then at the end of the day, it's swollen and sore. I keep trying to switch to the left, but it drives me nuts. I can't get enough done. So no, it's not improving. And platinum, no, I don't really. Platinum hasn't got enough like long-term research behind it for me to really understand much about platinum. I have always just, for a bit of diversification's sake, had a small amount of platinum, like a couple of % of my net wealth in platinum. And I don't even watch how well it's done. I hear it's done well, but that's about all I know.
All right. Well, that was great. So, Cass, we do have the next one coming up in March. I think it's the 4th of March. And then Cass will be going, doing some travel for work for a little bit, so in different time zones. So I am trying to get another one scheduled for April, but we do try to do these every couple of weeks. The links are always on the website. And now, you're welcome. You're welcome. What is the process of claiming back? Leanne was asking, or Angela was asking a question about what Leanne said. Can this be done a couple of years afterwards, the setup, when we set the SMSF up with you? Angela, didn't you pay yourself back? Cass, if someone has set up, say, 3 years ago, but didn't reimburse themselves for the deposit, can they do that now in retrospect?
I mean, yeah. I don't know if the auditor's going to be too happy about it.
Actually, now that I think about it, maybe I didn't put down a deposit, so maybe it doesn't matter. Maybe that was changed. Yeah, that's probably what happened. Great.
No worries. And Michelle, last one. The reason I want my bullion out is in case they change the rules. Chalmers has said they're going to change super from top to bottom to make it more sustainable and fairer. He's announcing something tomorrow, and Albo has announced a longevity protection proposal.
Tomorrow. Wow.
Well, Chalmers is always saying something, and then there's a lot of things that happen. So I think the point of view that we always have is the government loves to say a lot of stuff out there, and the point from them saying it to enacting it is often takes time, and they often just poke the bear to see what happens. So the more you can get on to your local representatives, federal, state, local, and just tell them don't change anything. If you're going to change it, make it better for the people, the better. We can't really comment on anything until it's sort of come in. Someone's just joined and we are wrapping up. So do you have any quick comments?
I can just add to that. Generally, I mean, there is a basis of law in Australia that they can't make tax laws retrospective. And that's why superannuation laws can be quite complex, because we've got so many, well, if you're below this age and over this age, and because of all the times they've changed the law, it's like, well, everything that's happened up until now is covered under the old law, and we're introducing a new law to happen from now on. So those of us that have already got the SMSF and got our wealth in the SMSF, the laws shouldn't change what we've got. But that's just in theory. That may not be in practice. As Mary Jane said, we can't really comment until we actually see some legislation about an announcement. And believe me, I mean, you probably do. We watch this stuff all day, every day. So anything that comes out, we will be straight onto it to see what effect that has. And if you don't already get our newsletter, sign up for it, because we put stuff out in the newsletter all the time. Every time we can see something that is going to affect our clients, we put it out there. And if there's ever any planning strategies, so for those of you that don't know, the reason my hand is so sore is because I'm working so hard at the moment setting up family protection trusts, because we believe there's an inheritance tax coming, probably in the May budget. So a lot of our clients are wanting to transfer all their assets into a trust before May. So that's why I'm working so hard to get everyone sorted before May. So anytime there is a law change coming, or we see something we get straight onto, and we've got a whole team of experts that we can call upon to work out strategies for dealing with whatever we can.
And just on that, you can sign up to the newsletter on our website, freedomffs.com.au. If you haven't received our newsletter and you know you have signed up, please check your spam folders. We had a system change over the Christmas break, and something seems to have been putting people's emails in the spam folder. So please go dig it out and allow it to be recognised. All right. Have a great afternoon, everyone. For the latecomers, sorry, maybe the time difference got you confused. The YouTube will be up in the next couple of hours or at latest by tomorrow. Bye.
Yeah, bye.